Hello, everyone. Welcome back to the Virtual Investor. It's Michael and Paul, and we have another deal review to go through. This one is in Ladysmith, Wisconsin. Mike's got the whole breakdown, all the numbers, a lot of the pictures, and what we thought we were going to get to what we actually got. We're going to go to the full breakdown here, tell you what went right, what went wrong, and where to look forward to. All right, Mike, I'm going to hand it off to you here.
All right, thanks, Paul. So, like you said, it's properties in Wisconsin. We're all part of the state. And the way we acquired it, surprise, surprise, with an online REO auction. So we won this one at auction. Funding, we used a mix of two different private lenders on this deal. And Renovations, we'll get into them on the next page in a second. We just spent a few grand there, just minor stuff to enhance it, to make the property mortgageable. Again, we tapped into a local agent. We got plenty of videos on that, on how to find an agent when you're out of state, and have them help you analyze the property and then reward them with the listing. And here are some of the after picks we'll start with. As you see here, property, 3-car garage, which made it appealing. House is a mix of updates and dated, I would call it.
Yeah. It wasn't in too bad shape. It's got some nice woodwork, nice flooring.
And I'll explain the renovations in a second on the next page, but just kind of give people a flavor of mix of dated, updated. But again, it's a perfect example of a livable property. Someone can come in, get a fair value price from us with this purchase of this property, and then make the renovations as they see fit for themselves. And it's kind of a win-win for everyone there, and a nice little backyard as well.
Yeah.
So that's what the interior looks like. Now, if we go back and rewind, play Monday morning quarterback here. Initially, what we thought was a quick in and out wholesale, call it 2 to 3 months. Now, we hit the 3-month and change timeline. However, we originally thought about 125 as is value and pick it up for around 85 there with a 4K buyer's premium. And that would net us about 20K on a quick wholesale. And in this price range, that's kind of like a target for us. So we'd be happy for like an in and out wholesale, incorporating all the holding and closing and selling costs.
Mm-hmm.
What ultimately ended up happening is we actually won it just under our bid. So here originally the max bid with the buyer's premium would have been like 89 and change. We got it for 187 and change, or 87 and change, I should say. We ended up doing some rehab just under 3K. And the work there needed really was minor stuff from cleaning out storm doors, kitchen windows, lawn maintenance type of stuff. Nothing major, just minor repairs to help sell the property. And then that's the rehab cost. The lender's interest, like I said, we had used 2 private lenders on this deal. It's a holding cost for about almost 4 months, just under 4 months hold. Insurance cost, some utilities in here. Selling costs, this is primarily your agent commission. And then we ended up getting 117, not the 125 that we thought. And again, net profit, not terrible, but a quick, 3-month hold on your money of $12,160 on this deal.
Yeah, I think we might have had a little bit of a seller assist on this too, Mike, didn't we? Or give back towards repairs that might have added to the selling cost.
Yeah, that's true. That might have been like a 120 with net 3 or something like that on that. I can't remember.
Yeah, a little bit. But this still, when it's a low risk, it ended up being a lower reward, but still $12,000 on a property you hold for 4 months, and the purchase price is 87. We're all in it for 90 some. Pretty good return on investment still overall.
Yep.
Not the home run we're hoping for, not a great one, but still a good one. If you're doing one of these a month, you're making $100 and some $1,000 per year. So
yeah, exactly. And again, this is none of our own money, right? It's private lenders that funded this deal. And again, in 3 months later, with some just minor phone calls and to get some stuff done, a quick 12K wholesale, basically, wholesale, whatever you want to call it, since we actually did some rehab.
Yeah, and these rural markets, Wisconsin's actually a pretty good market overall. The rural markets, things will hold a little bit longer. So 4 months, if it's in a good suburban market or a more urban market, it might move a bit quicker. But here's the thing: they're harder to get those deals, right? They're generally costing us more. The cost of capital is more, and higher risk as well. So we love these secondary, tertiary, third markets, these more rural markets. And this was an ideal one for like a contractor to come into, with all those garages, the extra storage, and also to put, add sweat equity, right? By them doing their own renovations to the property while they live in it. It's a win-win for everybody. We make money. They're going to hopefully grow some equity and have a nice house to live in.
Yeah, absolutely.
So this is I think we have some more coming up. We have one in Boonville, Mississippi that's going to close. We have one in Advance, Missouri. So we got a couple more coming up shortly that will have more deal reviews for you guys coming down the road here.
Yeah, and then we also just published a foreclosure market update last week as well. So we'll kind of sprinkle in some deal reviews with some other things that we're seeing in the market every other week here.
Absolutely. Interest rates crept up again, I believe, this week here. With all the with the election being over now, that's going to take away some of the uncertainty in the market, which is good. And the Fed just did drop the rate by 1/4 point. That's hopefully right. That spurs a little drop in the 10-year T-bond. Who knows? Who knows what's going to go on? But we would like to see it drop so that the spring market next year becomes a little bit more solid here in 2025, the way it was earlier last year and the year before.
Yeah.
So that's where
we kind of seen the late summer, early fall with all those closings we had with the rate drop in the second half of summer, basically. So you could see the demand from a home buyer perspective coming to the market once rates get under a 6.5, close to 6, almost 5 type of rate. So it's pretty, buyers are still pretty sensitive right now to the rate.
They are, the cost of everything is so high. So you get in the 5s and you're going to have a lot more buyers out there. You're going to have a lot more demand. There's still not a whole lot of inventory out there. We're still below normal. So everything looks good here for the spring market for 2025. We're hoping to pick up a lot more deals here year end. This is typically the time of year Michael and I get a lot of deals going into, say, March of the next year through Q1. So we'll see how that continues to trickle in there. We're using other resources. We don't just buy bank owned. We sometimes buy from wholesalers as well.
Yeah.
So that's something we're still trying to dig deeper in here. But all right, everybody, thank you very much for following us here. Make sure you give a like if you got something from this, and we'll catch you in the next video.